Hello, everyone, Paul here. Today I'm going to be talking about a strategy that I talked about a couple days ago. Uh, it was with using the linear strategy, and I used it for the exotic forex. So if you want to check that one out, but I'm going to be using the same strategy, and we're going to be looking at the stock market. And I'm kind of relate this to the video that I made yesterday where I talked about SPY and trading SPY, but this is over the trading strategy. This is kind of off of good signals with this indicator setup that I use to find really good signals to get in for the stock market. So I'll show you how to set it up. It'll be similar to the video I made a couple days ago, and I'll show you how to set it up with this. How I came onto this was. When I found the indicators, the color-coded moving averages, I wanted to see if there was anything else like that. So I found one that was similar with the stochastic, and something more along the lines of being more clearer. And this new indicator, it's pretty clear what you just need to look for, and as far as when to enter. It gives good entering points. I would go over another strategy on how to exit, but I'm going to show you guys how to set this up. It'll be similar to the exotic forex pair video that I made, and we're going to be looking at how to use this strategy for the stock market. Okay, so the strategy is very simple to understand. Basically, you need to know the linear line strategy, which I talked about a week ago. So definitely check out my previous videos where I talk about the linear strategy. Basically, you want to set it up to where you have a linear line, and you want to take note of when the candles are going through that linear line. And the next thing you want to do is, what I looked for was a new indicator, and this one is the CM Stochastic Pop. So basically, you just go and search for CM Stochastic. It's by Chris Moody, I believe. So I'm going to put that one on here just so. This is kind of how it looks when you first load it. But what I basically did is I just made the lines a little bit more less thick, because it just looks like a clear screen. So I turned up the opacity on these, and I made the lines less thick. So basically that's all I did to get the where it is right now. So basically, if you have the linear line set up and you have this CM Stochastic here, it's real easy to find the signals for the stock market. So I'm going to do this based off of the hour, but you can use shorter time frames if you want. Basically, what you want to look for is your entry point is when, let's just say you're doing the stock market and you're trading SPY here. You want to wait when we're doing on the hour here, and you can also do this on SPX and doing it on Forex, but I'm not going to be talking about that in today's video. I made videos about it, but you can do the same for SPX because I'm talking about SPY right now. But let's say you wanted to trade SPY. You basically have to wait for this green line to cross up. It's probably you can't see it there real clearly, but there's blue there. So that's a cool down period. And once you see that green start to go through the other green and start going up, that's a good indication that it's going to start going up. So what you want to focus on is whenever you see that green line going up, and your exit point is when the candles start touching the linear line. So that's basically your enter point. Your enter point is when it's crossing up on the CM Stochastic. Your exit point is when it's touching the linear line. So you enter with the CM Stochastic and you exit with the linear line. So let's just see if this works pretty well with SPY, and we'll look at a couple of stocks here. So right now on the hour, we see that it's crossing up right here. So you would enter right here. You would wait until it touches the linear line, or you can get out earlier if you want. But from here to here, this is about a $4.90 difference in price. So if you did a contract, that would be about almost $500. So if you wrote it out to here till it touched the line, you would be looking at a 346. So that's still profit right there. That's $346 right there. So let's look at a couple months. Now another indicator that I put on here is the consolidation, just to make sure I do not enter when something is consolidating. So these periods right here, I would not trade in because it's consolidating. So if you want to, but you see it again right here. You see, even though it is kind of consolidating, but you see it crossing up right here. So this could be an entry point right about here. You see it crossing on the CM Stochastic, so you ride that one out. Wait till it touches the linear line. Well, if you can get out here, or you can get out up here. So if you got up there, you would have made $436. If you got up here, you would have made about $288. And well, this is about a day, so let's just say we got out right here. This is a day right here. So this is $341 right here. And up here at the top is about $431. So let's look to see if we can find it again. So now we see it on going up with calls. Let's just see if we can find any puts. So we see that the red line is... So to do the opposite here, you want to wait for the red line to go below the... So you got your green line up here, your red line right here. So you want to wait. You want to wait for your red line to be down here. So that will give you an indication. So what you would do is you would enter right about here, because that's when the CM Stochastic picks it up. So you would ride it out till basically till it touches the linear line again, which is right here. So that if you waited till it touched the linear line again, this would be a $456 if you did one contract, and you could write it out till here. If you wrote it out to here, you would have made $632. So let's just see if we can find it again, and this pretty much points it out. It's pretty clear as day when to enter, when to exit with this strategy. You see the green line crossing the other green line right here, so your moment of enter would be right here, around right here. So you come in here, and you exit when it touches the linear line. But you can get out here, right here, where you would have made $571, or you can get out right here where you made $547. Either way, you would have been in profit. So let's see right here. You see the red line going below. And you ride it out. And you could wait for it to cross the linear line, which would be $400. Or you can get out right before it does, and you would have $528. So I think you guys get the general idea of how to do this with SPY. I'm going to go over some other stocks real quick, see if how well it works. But I use this strategy mainly for SPY because SPY has these movements of up and down, and it's very easy to find the moment where it starts going up on the hour and then down on the hour. You can really catch it going up and then down, up, and you can basically just ride it. And it's easy to see with these indicators. So anyway, let's look at some other stocks here. Let's look at MicroStrategy, one of my favorites, but you have to, with MicroStrategy, the contracts are really expensive, but if you can afford it, you'll end up making a lot. So let's just see if this works for MicroStrategy. So you see that the red line is crossing down right here, so you would enter right here, you would do your contract, which would be very expensive, but still, if you can afford a contract, you can afford a contract. But if you rode this out, it shows you right here, red line going down, ride it out, and it has not touched the linear line yet, but if you want to get out here, this is a $278 move. So if you were able to afford that contract, you make about $100 for every dollar. So that is a $27,000 move if you did options. So like I said, the contracts are going to be very expensive. To give you an idea of, the contracts are going to be pretty expensive. Even if you do a one-day contract, it's still going to be pretty expensive. So let's just predicting that the price is going to start going up. Which is probably not. No, it's probably not. But we'll have to see. Now, what I try to do is I try to get the dot as close as possible. Which, yeah, it's going to cost a lot of money. You're not going to get it off. This is really going to cost a lot. A lot. If you want to do in the money, it's going to cost a lot. Especially since we're entering a bull run. 31,000. Yeah. I really don't think anybody would be able to afford that right now, so let's just bypass that. But anyway, if you want to do a contract, you can if you want. So anyway, you could also, if you can't afford the contracts, you could focus on all the moments when it's going up. You can focus on all the moments when it's going up, and you can buy in, like right here. You buy in right here, and you can sell any sign of weakness. You could start selling. You see it starts touching the linear line right about here, and this is a 18% move in one day. So you can really get really good percentage gains with this. You don't necessarily have to do option contracts. And you see it again right here with the CM Stochastic. You can ride that out to about here, and you would have made 13%. So you can still make some pretty good percentages. It's just the contracts are expensive. Let's look at a couple more stocks. Let's look at Apple. Actually, let's look at a couple basic. Let's look at McDonald's. McDonald's here. Let's look like a basic stock here. See how well this works. Okay, so we see the green line crossing up right here. We see the green line cross right here. And you ride it out till it touches the linear line. You made, well, this is 4 days. Let's try to go for a day here. This is a $3.69 difference in price, so that's probably $369. You have to go over the statistics with McDonald's, but that could be $369. And let's see right here. You see it crossing down right here for a put. And if you ride this out from here to when it touches the linear line, this is $500 in 4 days if you want to look at a day's worth. Now, you're not going to get as much momentum as with trading with SPY. So this is barely a move right there, so you would have to hold it for longer. That's why I like focusing on SPY, because it has a lot of momentum. But let's look real quickly right here. We see it crossing up on the CM Stochastic. And you can ride it out till here, which is that's 2 hours, 1 hour. Let's do a day here. This is a $4. So this might be about $446. So anyway, there's that. So this really works really well. All the separate stocks might have a harder time. Let's look at Walmart real quick. I doubt we'll find anything with Walmart. But this works with any of the stocks here. It'll work with. So let's see how Walmart's doing. Okay, so Walmart stock is going down right now. You can see that it's crossing down right about here. And it has not touched the linear line yet. So this is just a 0.60. So probably about $60 if you were. It probably wouldn't even be $60. So do your numbers accordingly. But yeah, it works the same way. So this works the best for the ones that are like MicroStrategy and ETFs. So let's look at Riot. Let's look at some stock mining companies real quick, see if this works for that. I'll probably go over this and a couple more. So let's look at when it passes the linear line. right, well, these are consolidation zones. So right about here, you see it crossing down for a put. Right about here. If you rode this one out here to here, it has not crossed the linear line yet, but if you got out right here, you made $1.20 difference in price. So that might be, I don't know, we have to look at the numbers. Let's see how much $1.20 would be. It's pretty cheap. Let's see. What we want to look for, we want to get as close to the dot as possible. That's close enough. So, $1.20. So this is a call. We want to look for $13.50. $13.50. So yeah, you made about $100. A little about $100. That move right there is about $100. So let's look at one more stock. Let's just look at QQQ because that's an ETF, and they usually have the ETFs are usually the same as SPY. So anyway, let's look how it's doing. These are consolidating right now. A lot of consolidation zones. You had a zone right here where you see it crossing up. Right about here. So you get in right about here and you wait for it to touch the linear line. And so one day, that was a good move right there. That was in about one day you had an $11, $12 difference in price. So that would have been a good gain right there. You see it happen again right here. You see the red line going down. And you see it crossing the linear line. So you can get out here or here. But this is an $8, almost a $9 difference in price. So that would have been $900. QQQ is definitely something I probably should look into more when it comes to trading. Because looking at these numbers, these are some pretty good jumps. Compared to SPY, these are pretty good jumps. You see red line going down here if you rode this out here to here. This is, well, that's 3 days. Now 2 hours. In 2 hours, you still did $534. And then right about here, you see the green line going right about here. Right here to here, and that's, in one day, that's $750. So I'm definitely going to be looking in QQQ more because it looks like these numbers might be outperforming SPY. So it's definitely something I got to look at into. But definitely, if you use this strategy with the CM Stochastic and the linear lines, it will help you find. And I do this on the hour. I don't do this on the smaller time frame. You do have to wait longer to find the signal when you're dealing with it on the hour. But to me, it seems with the charts, it's well worth it. So anyway, using this strategy, it's using the linear line with the CM Stochastic. And it seems to work really well. The only one it would have a hard time with is MicroStrategy if you're doing options because it's going to be expensive. But if you want to use it for MicroStrategy because it's connected to Bitcoin and Bitcoin's going through, it's going to start going up. But you could really focus on just the higher percentage gains with that. But other than that, you can use this for like the ETFs and you can find some really good moments of getting some pretty good trades. It really outlines all the moments where it starts going up or down. So it's a very helpful strategy in my opinion. So I'm going to be going over the strategy again with crypto and gold. Other than that, if you guys like this video, this is for entertainment purposes only. I'm not responsible for any profit or loss if you choose to use the strategies in these videos. Anyway, if you guys like this video, hit the like button, hit the subscribe button. See you guys in future videos.